And speaking of things that are broken, because it sounds like the way that a lot of people think about these ways that you can heal yourself without having to pay absorbent amounts of money, that their way of thinking are broken. The payments process is broken too.
And as a 30-year guy, it would be my belief that the payments process is a little broken. I recently saw a post, which I thought was kind of interesting and telling, and it was a little bit of a stinger for me as someone who's been in the payments industry forever. If I pay you $100 in cash, you have $100. And if you turn around and you pay your bill with $100, that individual has $100. And if that person, that $100 travels through society as $100. If I pay you with a credit card, $100, you get 97. If you turn around and pay your vendor $97 with a credit card, they get like 94. If they try and you do a number of hops with that, and that value continues to decrease, if you're going credit card to credit card to credit card to credit card, because there's a middleman, me, bank. The bank is actually the bigger piece of it. That's always fun when you do an interchange analysis for a client. Here's how much you pay in terms of fees. Here's how much I get out of that, because most of it is going to the issuing and acquiring banks. I mean, they're taking the big chunk out of it when it comes to interchange. We get next to nothing as a payment provider, but yet everyone associates the cost with me. The challenge with that is that you are decrementing the value of this exchange of monies with every single hop. And as a guy who's been doing this for 30 years, I never really thought about that at the level that I'm thinking about it now. And you look at the nature of payments that are broken and say, okay, we get 6, 8, 10 hops out, and my $100 is worth 5. Why? We've paid everybody along the chain for this, and we're decreasing the value of our goods and everything else by virtue of the nature of this transaction. Convenience, sure, but at what expense? And from my own personal perspective, not a big deal. But if you look at here, you want to talk about a powder keg, the nature of stablecoin, crypto, and P2P type crypto payments, blockchain. Bitcoin, sure, it fluctuates. Sure, I've got my Coinbase account. Sure, it goes up and down. But if you look at the nature of stablecoin and the ability for me to pay you in stablecoin, $100 worth of stablecoin, it's $1 to dollar. And you turn around and you take that stablecoin and you transfer it to someone else. You've taken cash and you've turned it into a digital instrument. I think there's a strong play. The next phase of payments is in a blockchain digital environment where we can go back to that true cash to cash exchange of value without the constant decrement. Sure, there's a cost. It's a lot less in a crypto environment to move it. But if I moved money to you, Coinbase to Coinbase at a dollar for dollar, there's really no fee associated with that. I've just exchanged a value of some digital asset to you, and you retain it at that value. Now, if it fluctuates, especially for Doge or Bitcoin or whatever it is. There's a fluctuation to that value, but for the most part, it's not all of the big players in the middle that are taking a big chunk out of that.
So